All right, let's just jump right into it, because today we're going to tear down one of the biggest, most damaging myths in all of trading. We're going to talk about the real secret behind making consistent money, and let me tell you, it has almost nothing to do with being right all the time. I mean, does that hit home? You ever see a setup, it just screams perfect? You dive in and bam, not even 5 minutes later, you're in the red. So what do? Maybe you try to force another trade to win it back, right? We call that revenge trading, and the hole just gets deeper. Look, if you've been there, you're not just not alone, you're in the majority. And listen, that's not just a feeling, it's a cold, hard fact. You look at the data from the brokers themselves, and they'll tell you a staggering 70 to 80% of retail traders consistently lose money. But here's the thing, why? It's not because they're bad at reading charts, it's because they're playing a completely different game than the pros.
And that brings us to this whole myth of the Holy Grail. You know what I'm talking about. So many traders are on this endless quest for that one secret indicator, that one magic pattern that's going to predict every move. But here's the truth. It doesn't exist. The market's got this built-in randomness, and that search for perfect prediction, it's a trap. And it's distracting you from what actually works. This slide right here, this is the entire game in a nutshell. Amateurs are completely obsessed with one thing. When do I get in? They think the entry is everything. But the pros? They're asking a totally different question. They're asking, how much skin should I put in the game on this idea? Their focus is all on position sizing, on managing their risk, not on some magical entry point.
So this is where it all clicks into place. The real secret to winning long-term, it isn't some mystical chart pattern. It's just simple, powerful math. It's all about giving yourself an unfair advantage, a mathematical edge on every single trade you take. And to really get this, let's first walk through what most traders do. This is the path that, honestly, leads straight to a blown-up account, and most people don't even see it coming.
Yeah, they'll risk a massive chunk of their capital on one trade, something like 10%. It feels aggressive, right? It feels like you're going for the big win, but mathematically, it's an absolute recipe for disaster.
So let me ask you this. What do you think happens after just 5 losses in a row? And by the way, a 5-trade losing streak, that's not just possible, it's inevitable. It's going to happen to everyone. So what happens to that account when you're risking 10% a pop? Well, your account gets hammered. It's down almost 41%. But that's not even the scariest part. The truly insane thing is what it takes to get back to even. You now need a whopping 69% gain just to get back to where you started. You've dug a hole so deep, it's almost impossible to climb out.
Okay, now let's flip the script. Let's look at what the pros do. The sustainable, disciplined approach that lets them stay in this game for years, even decades.
It's simple. They risk a tiny, tiny fraction of their account, usually just 1%. So after that same exact 5-trade losing streak, what happens? Their account is only down about 5%. You see the difference? That's not a catastrophe. That's a manageable, recoverable business expense. They can make that back no sweat.
And this whole strategy is built around one beautiful concept, asymmetric risk. All it means is that you set up your trades so that your potential upside, your profit, is way, way bigger than your potential downside, your loss. This is it. This is how you can be wrong more often than you're right and still make money.
And look at how this math plays out. Here we've got 10 trades. You lose 6 of them. 6! That's a 40% win rate, which most people would think is terrible. But because your winners are 3 times bigger than your losers, that's a 1-to-3 risk-reward ratio, you actually end up profitable. Those 4 big wins more than wipe out the 6 small losses. This is the math that actually matters in trading.
Okay, so if the math is so simple, why doesn't everyone do this? Well, it's because our brains, frankly, are not wired for this kind of thinking. Trading lights up the same reward centers in your brain as gambling does, and it pushes us toward a totally broken mindset.
You really have 2 ways to think. The amateur thinks in terms of predictions. Every single trade is a bet. They're chasing that dopamine hit of being right, and they feel crushed when they're wrong. The professional, on the other hand, thinks in probabilities. They couldn't care less about any one trade. They're just executing a statistical edge over and over across hundreds of trades. It's not about being right, it's about being profitable in the long run.
So the big question is, how do we make that jump from the amateur column to the professional one? Well, the good news is you don't have to be a math genius. All it takes is a simple, disciplined framework that you can start using on your very next trade.
And here it is. 4 simple rules. Number 1, you never ever risk more than 1% of your account on a single trade. Period. 2, you only take trades where you can realistically make at least twice what you're risking. A 1-2 risk reward is your minimum. 3, you always know your exit point, your stop loss, before you even click the buy button. And 4, you journal every trade. Not just the stats, but how you felt, your mistakes. I know, it sounds boring, but trust me, in this business, boring is what scales.
Let's make this super practical. Say you have a $5,000 account. What does this mean for you? It means your maximum loss on any single trade is $50. That's it. And you wouldn't even think about taking that trade unless you had a clear path to making at least $100. See? These aren't just guidelines. They are non-negotiable rules of the game.
And this all leads us to the final and probably most important idea here, the real path to profit. As we wrap up, I really want you to reframe your goal. Most people think trading is about compounding money. It's not. The real goal, the one that leads to lasting success, is compounding your discipline.
You know, I once heard about this trader who did something incredible. He didn't even check his profit and loss at the end of the day. The only thing he tracked was one question: did I follow my rules today? That's it. And guess what happened? Over 6 months, while everyone else was riding an emotional roller coaster, his account just grew. Slowly, steadily. Why? Because discipline compounds, just like money does.
Because here's how it works. Your first job as a trader is not to get rich quick. It is simply to survive. It's to manage your risk so well that you're guaranteed to be here tomorrow to trade again. That's the foundation.
And once you survive long enough to apply your rules with ironclad consistency, day in, day out, through the wins and the losses, that's when your mathematical edge actually gets a chance to work. That's when trading stops feeling like a slot machine and starts feeling like a business.
And that is the final piece of the puzzle. When you have a proven statistical edge that you execute with unwavering consistency, profit just becomes the natural result. It's the byproduct of your discipline. It's the outcome, but it was never the goal.
So I'll leave you with this question. After all this, after seeing how the real math works and how the professional mindset is built, are you ready to stop gambling? Are you ready to start trading based on skill and not just luck? Because that choice right there is going to determine everything.